Hello, everyone. Mike Arnold here, co-founder, Pat Trading Partners, along with Bob Iacino. Hey, Amit. Good afternoon, Royal Palms. Hey, Patrick. Hey, Pavneet. Good afternoon, Jacob. Did the no? It's not an all-time high. We're not, we're not near an all-time high in the Nasdaq just yet. Uh, we'll bring on Bob in a second. Let me see. Let's just we had a big rally today. Pretty much. Well, I mean, Nvidia up almost 5%. AMD up another 4%. It's buying everything. Technology, comms, services, and consumer cyclical leading the charge. Fed Watch is only 60% now for the pause, 40% for the hike. So that's coming up, and we're all getting again closer to extreme greed again. S&P 500 PE ratio up above 24.3. Where's the Schiller one? Let's just go and then bring on the Bob. 29.43. Wow, that's going to get above 30 again. I did not look at applied materials yet. That was the biggie after the close. Tomorrow's John Deere is the biggie. But that's about it. With that, I'm going to bring on Bob. Hey, Bob.
What's up, guys?
How you doing?
Big, big Powell talk tomorrow.
Yeah, let's go through that. Hold
Tomorrow,
on.
Jerome Powell.
I didn't
Yes, Jerome
mention.
Powell is going to be really interesting. On, I am not feeling up to snuff still. I know you guys know I missed Tuesday, so I just want to go through a couple of things. If there's any questions, Richard has a question I can answer pretty quickly without jumping into this. You did not seem to be as on board with much of what Dave Cullen was saying as much as Jimmy was. It's not that I wasn't on board with stuff. I don't like to comment on stuff I haven't researched. So Dave has spent hours and hours researching stuff. He's obviously an organic chemist, so he knows how to research. I'm on board with most of his pharma capture theories. When he started going into other stuff, it was just stuff I didn't know about and stuff I haven't looked at. So I don't know that I'm on board or not on board, but I've already asked him to come back. So he'll be back on the podcast again, hopefully in another month and a half or 2 months, maybe. So it's not that I wasn't on board. It's just I clam up when I don't know what I'm talking about. But pharma capture, yeah, completely on board. So the Powell speech tomorrow is interesting because it's Michelle Bowman and Powell at the Texas Bankers Association annual convention. Texas is filled with a lot of regional banks. So I suspect that he's going to get grilled quite a bit on are the regional banks secure or not. But I also suspect he's going to get grilled on policy quite a bit because it was the Fed's rapid rate hikes that caused the banking crisis that we went through. I would argue the Fed had been telling everyone they were going to do this and these guys should have hedged. But they were also, prior to that, as our friend Dr. Kumal Shri Kumar pointed out on the podcast, they were also saying inflation was transitory and basically reassuring banks that it was okay to get into treasuries that wouldn't be affected by inflation because inflation was transitory. So he'll be hit on a lot of those points. It'll be really interesting to see if anything comes out of that talk. The second thing I wanted to point out is keep an eye on copper. We had Mike Singleton on the show with Mike Arnold, and he's Invictus Research, and he had a really interesting chart this morning that I sent to Mike on how closely correlated copper and the manufacturing PMI is, the ISM manufacturing PMI. The correlation is really, really tight. There's a couple of outliers here and there, as always happens with correlations. And the PMI bumped up a little bit. There it is, copper and the ISM manufacturing PMI. The PMI bumped up a little bit. Copper hasn't really responded. Maybe the copper was leading it a little bit with the little uptick you see there. But copper is now working on its fifth down week. So that's more economic slowing both in manufacturing in the US and globally. And then the last thing I want to say about these rallies, the NASDAQ, it's very nice breakout. John, we're still over 20% from the all-time high on the NASDAQ. To your point of asking if we went to an all-time high, we're 20% below the all-time high. So we're not close to it yet. Very far away from the all-time high on the NASDAQ. Mike and I both said that you could easily have more up days in equities, and it's still a tradable move higher for me, not an investable move higher. I haven't traded it at all. And yes, I'm still long gold for whoever's going to ask me that question, because I'm sure that question's coming up. But the interesting thing is something that Mike and I know I said it and I know Mike agreed. And Mike may have said it since then. But after that last Fed meeting, they had the first rate cut priced in July. And they had rate cuts in every single couple of meetings after that, priced in as the highest probabilities. And that is starting to bleed away, as Mike and I said it would. So
Slightly.
when you start to hit, go ahead. What, Mike?
Just like, I mean, they have another month of pause now, and then it starts to, they're still on the rapid decrease. It's just shifted out a month.
Yeah, there's still November from July, I feel like is a pretty dramatic move, because even though it's only 2 meetings, it's 4 months. So it's 4 months of rates staying up there again. And you still, it's interesting to me because I think they're all going to slowly slide over. And, you know, I hear, oh God, I can't remember his name, Renaissance Macro, Dutta. He said that bears have no case because on the one case, they say there's going to be a recession. On the other case, they say the Fed's going to hold rates higher. And I wish I would have been on the screen next to him, because I would say I think the bulls are saying the exact same thing. The bulls are saying Fed's going to cut rates, so you should buy stock. And there's going to be a soft landing, so you should buy stock. Well, if there's a soft landing, the Fed's not cutting rates. They're literally telling us that. Okay, they're telling us that they're not going to cut rates. So every single one of these probabilities you see on the screen here is going to slide to the right. And the June meeting, once you're at 60-40, it might as well be 50-50. There's no conviction that June is not a live meeting for a rate hike. And right after the meeting on May 3rd, it was either a pause or a rate cut. Remember that, Mike?
Mm-hmm.
There was no probability of a rate hike being priced in. It was a pause or a rate cut. And now we're basically 60-40. If you look at the yields on U.S. Treasuries in the last 5 days, the 2 years risen 35 basis points. The 5 years risen 33 basis points. And the 10-year has risen 26 basis points. And the inversion in all 5 of those days has gone the wrong way. It was negative 49, negative 52, negative 55, negative 59. The inversion is going back toward recession, and bonds are pricing in more inflation again, which means the Fed is not only not going to cut rates, but they might hike again.
Yep.
So all of this plays in. So if you're bullish because you think the Fed is going to cut, that's starting to whittle away. And if you're bullish because there's a soft landing, I have 2 things to tell you. Number one, they've only achieved 1 soft landing. That was in 94, and it wasn't much of a rate hike cycle. Number 2, hard landings look soft when they start. When the landing starts, it looks very soft. And then all of a sudden it gets hard. We're not going to crash. Neither Mike or I have said that we're going to crash. But if we were here with 5 to 5.25 Fed funds rate, or even 5.25, 5.50, where do stocks go? What happens to stocks if that's the case? So, anyway, that's all I have for you guys. I'll take any questions, and I gotta go lay down.
Let me just see. Good evening, Charles. Hey, George. Good afternoon, Paul. Hey, Daniel. How am I doing? I'm still alive. Thanks for asking. Hello, Sashi. Nvidia, yeah, Nvidia is just going nuts. How will the tech index dumps big? It looks like everyone buying tech. And the tech to the rest of the market ratio is has now, I think, even surpassed the ratio it was at the .com peak.
We still
This
have
generally
bad
doesn't
breath, right?
end well.
I like
Uh,
saying that, bad breath.
what was that?
I will say we're starting to get volume on up days, but it's still nowhere near the highest volume that we had on down days. It's
No, and
nowhere
again,
near
this is tradable. From my perspective, it's trailable. uh,
it.
it's trailable. You ride the bull as long as possible, but you know what? It don't want to own that bull. Still don't want to
Right.
own the bull. It's a swing trade. I mean, we're getting back to very overbought. The Nasdaq's insanely overbought, but doesn't mean it has to stop. And Nvidia, I
That's
mean,
why I think Powell to
go
really
ahead.
important. No, I was going to say that's why I think Powell tomorrow is going to be really important because if he wants to, if he doesn't like what the market's doing, he'll say something about it. If he doesn't care, he won't. But I'm telling you, if he doesn't care about what the market's doing, then he's comforted that he can keep rates high, and those cuts won't come.
Yeah, and Nvidia is just getting to. I mean, Nvidia is just getting it. Hey, we could go to all time highs in Nvidia with
Mm-hmm.
with earnings heading down. I mean, here's an AMD. Where's AMD's even more insane. Again, now back to PE of 430. And look at this. So back in your earnings from November 1st, they reported 67 EPS revenue of 5.56, and it was trading down around 60. You go flash to January 31st, reported 69 cents earnings, revenue 5.59. So again, slightly better, and it started to rally. Now we get to only 60 cents of earnings and 5.35 reported. So that's even worse than it was in October or November 1st. And we're closing in on almost double price. Back to 430. Can it keep going? Sure. It doesn't have the fundamentals to support anything, but everybody wants to own chips. I mean, everybody wants to own insanity at this point, so you ride it until it stops. But it will stop. And when it does stop, it will get interesting quickly. But do I know when that is? It's going against cycles. It's going against everything. It's just buy everything. Also, the amount of it's so fascinating if you watch the 0-day expiration options that kick in these reversals. I mean, it's like timed across the spiders, across the S&P, across the Qs, across the Nat. I mean, it goes off in the matter of seconds across everything. And the volume is at its tons of volume. And the gamma that kicks in is huge. So what I'm worried about is once it does roll over and what if it starts pressing the short sides for drops, you could get the exact opposite of what's happening on the rallies. But for right now, we are in rally mode. Let's see. Any rationale why Christoph wants to know, Bob, or any rationale for why semiconductors are going nuts the past 2 days?
I think mostly because big tech is kind of like overvalued. So what you want to do in this, if this were turning into a new bull market, you want to buy what's been unloved in the bull market. You want to buy the rest of the market. You want to buy the 5 or 6 or 7 leaders. So I suspect that the next move down, obviously being pushed by AI and other things, would be chips. But this is a guess. I mean, one thing I was going to tell you guys is if you believe that this is a bull market, or this is going to turn into the new bull and make all-time highs, you want to buy the stocks that haven't been loved. So the chips didn't really follow, at least initially, Alphabet and Apple, and except for I think one did. I can't remember which one.
I mean, they've still been trading really strongly all year.
Yeah.
I mean, it's not like they're unloved. I think and what was the stat I gave out this morning? It's now over 60% of this S&P rally is due to three companies. So there you go. But that's another thing that worries me too. So you stay with it, but when you have concentrated groups of stuff rallying, it can turn on a dime too.
What was the breath like today, Mike? I didn't see it.
The breadth was actually pretty decent today. The breadth wasn't as
That's
bad. So again, it's in trailing mode. I mean, the little pullback, and then you see the little pullback from the double that I had up from the open, and then you get the momentum. You have all these 0-day expiration, and you get this kind of momentum. You had it yesterday, boom. You have it today. Once they all start going off, it's there are no spot momentum bars. Because
Hey, can you throw up Paul's question?
what's Paul's?
Interest rates.
Where? Oh. Mike
Bob,
Bob,
what's
what's
the
the point of
point
watching the
of
interest
watching-
rates going forward? If the market just ignores the increase anyways, they have become useless.
So, Paul, you're making the mistake of taking a very small data set and making a large decision on it. Interest rates are not useless. Number one, neither Mike nor I trade anything off of what interest rates do. We trade off of patterns, right? I just showed you a correlation chart between the PMI and copper, and they're not perfect. So when you say, they've become useless, they have become useless, how do you know when them becoming useful starts again? Because historically, they're very useful. But you don't trade anything off of what interest rates are doing anyway. Interest rates are a part of the puzzle if you want to understand what's going on behind the price action. It's really, to me, I don't really care what's going on behind the price action. It's a hobby. It's not something I care about from a trading perspective. From a trading perspective, it's all patterns for me. And again, I haven't, like the NASDAQ's a good example. For the way that I look at the NASDAQ, I haven't had a good retest of anything where I could buy it. The rotation zone's a little flatter than I like it. We haven't broken out of a channel and retested it yet. So that's why I haven't put any longs in on that. But I don't care what the interest rates are doing as they apply to trading or their usefulness. They're useful in understanding the narrative of what's going on, the price action, and where sometimes that price action may reverse for a reason you can see, but certainly not something you would trade. So, Mike, I don't know if you want to add to that.
I mean, and remember, things can uncouple for a while, and when they recouple, it gets interesting. The market's ignoring it. The market's going to do what the market's going to do, because you have a dollar index that's now strengthening, and you have yields that are climbing again, and the market's just like, whatever. So, to your point, Bob, when does it matter again? It will at some point. Who knows?
Right.
It could be Monday after OPEX. Don't know.
Here, Pavneet actually, I know I'm skipping options, but Pavneet just put a question in under options 22 there, which kind of applies to the same thing, Mike. And then options, Mike can put up your comment after that if Mike doesn't mind.
Why is dollar and DXY rallying and equities insanely strong? Also, gold's dropping. If bond market is signaling inflation may go back up.
All right, so this is back to Paul. The dollar trades more off of interest rates, okay? And equities don't always trade inversely to the US dollar, okay? If interest rates are going higher, that theoretically means fewer dollars in circulation because they're more expensive. If interest rates are higher and you borrow dollars, you're borrowing them at a higher rate. So fewer, let's just call them people, fewer people can borrow, and therefore that's less money in the system, which makes the dollar more valuable. Okay, so dollar is going up off of interest rates. The dollar doesn't trade off of stocks. That's another thing, guys. Not everything is stocks. Okay, not everything in the world is what stocks are doing. I know that's what most of you trade. And then to the second point of that, the bond market is signaling inflation may go back up. Why is gold dropping? No, the bond market is reacting to inflation possibly going back up, gold reacts to higher yields or lower yields. So if yields are higher, that means you can earn interest on your dollars and you don't necessarily want to be in gold. If yields go lower, that means your dollars are paying you less interest, so you might want to be in gold for security. Okay, so gold, again, trades more off of interest rates than inflation expectations. Gold trades off of inflation when inflation is low and expected to build. Okay, that's when gold trades because it's an asset. All right, so theoretically, gold where it is right now, okay, you're looking at gold settling around 1960 or so. Gold where it is right now is priced for the current level of inflation. And if yields go up, treasuries now become a competitor to gold. So again, it's a yield thing. These things aren't always related to stocks. And that goes back to what Paul said. He's like, interest rates are useless. They're actually incredibly useful as long as you don't use them as trading indicators. They just help you figure out the story. Do you want to throw options 22 up? I hate that I skipped over, that I asked you to skip over the question.
Mike and Bob was saying looking like a blow off top, or does a blow off top usually end with futures sky high pre-market? What will take this market down?
I'll leave that to Mike.
Is it looking like a blow off top? It's looking like we're closer to a blow off top, but now a blow off top, we go back into major support level. It's going to take a lot to chew through that. So it's going to be interesting to see how it reacts. But yes, especially the NASDAQ and the rotation and the rush to buy at the end of a move like this. But does that mean it ends tomorrow? Does it mean it ends next week? Does it mean it ends June 1st? We're closer to the end than we are to the beginning. But we're overbought on tons of stuff, and the ratios, again, the tech ratio to the market is getting to nosebleed levels. Now, is it pre-market? It doesn't have to be. I mean, we could blow off, but what we'll be telling is when we actually get a series of sells that stick. Right now, every sell is a buying opportunity. So once you start seeing that shift, then we'll be watching for more of the end that the top's in. And remember also, you're not trying. The trend is your friend until it ends. You're not going to know if there's a blow off top by one little drop. I mean, we had the little channel down and then it kicked in again. The little sideways move and then it kicked in again. So you're not going to call the absolute high on this. You're going to have to judge, all right, we're starting to get momentum bars to the downside. Hey, it's rallying. Oh, wait, the rally stalled out, and now we're getting more momentum bars to the downside because things are getting, instead of every dip getting bought, the rallies are starting to get sold with momentum. Not just choppy, but with momentum. Then we'll know, and it won't be, let's say, it could happen tomorrow. But then we'll go next week, yeah, that will probably put in the short-term top, or we'll get the secondary retest, which will set up a shortable pattern, and then we'll know much more. Any thoughts on mortgages 6 to 12 months out?
6 months, I'd say here. 12 months, I'd say lower. I don't think 6 months we get much movement. 12 months out, I'd say lower.
Bob, what's your view on oil and natural gas?
So we've got an OPEC meeting coming up in June. I would wait for that, speculating on oil. It was interesting because the IEA put out a note that basically said that the market is ignoring how well the Chinese reopening is going or going to go. They estimated 60% of the new demand for crude oil is going to come out of India and China. And I didn't understand, honestly, what they were looking at when I saw that, because China's economic data is still not great. But they seem to think that it's going to kick right back in. Crude oil, I'm opinionless on that, because I think if you held a gun to my head, I'd say crude oil is going a little lower because I'm a recession believer. So I think the use of energy is going to be a little bit less. Natural gas is a little different because natural gas right now is reverting to its mean based on seasonality. There's plenty of natural gas in surplus now. We're above the 5-year average, but we're going into what is normally seasonally the slowest time for natural gas prices. It's from May to just kind of like late July, early August. I'm sorry, late August, early September. And then you get a natural gas spike in prices from a seasonality perspective. But natural gas is also very low during its seasonally strong period, which is generally from December through about May, right? So we'll call it April. So it's reverting back now. And that's what happens when the seasonals get knocked around. It generally kind of reverts back to, I hate to call it a mean because it's not really a mean, but it reverts back to kind of an average of where it should have been and then recalibrates from there. So quite frankly, I wouldn't trade natural gas right now. It's had a strong little streak here, but still down 40% on the year. And you're not going into a seasonal demand period. Now, I suspect that situations in Europe with the Ukraine war could change natural gas pretty quickly because quite a bit of our product has gone there. But I don't expect the summer season to cause any sort of change in the seasonality of natural gas. So I know that doesn't help you, but that's my opinion.
Would I agree that we are still heading back to the August highs in the Nasdaq? The August highs from which year? I mean, last August highs were beyond. So are you talking the August highs from back when? I mean, which August
Yeah,
highs?
we're already above the August last year.
Yeah. I mean, and then you had the August highs, but they weren't the highest highs. And if you're asking if we're going back to all-time highs, there's no indication yet. Remember, you can still get massive rallies in bear markets.
Right.
Bob, your thoughts on retesting October lows, or do you think that's off the table?
No, I don't. I don't think it's off the table. It's definitely a much harder get. I mean, the recession would have to be deeper than I thought, and the Fed would have to still see stubborn inflation. So now, with as far as things have gone and with the breadth getting better, I'd say that stagflation is the only way we get there. And I still think that's the highest probability outcome. But the Fed may have actually threaded the needle between recession and inflation. They may actually kind of cross where we go into recession and inflation becomes tame. But no, it's not. It's not off the table for me at all. You look at it this way. If you look at the October lows, think about it like this: we are 20% away from the Nasdaq all-time highs, right? We're 32% away from the Nasdaq from the October lows. It's not that far. Actually, I measured that wrong. All right, 23% from the October lows. So we're equidistant between the two of them. We're equidistant between the all-time highs on the Nasdaq and the October lows. It is everyone's sort of upward bias in stocks, which does exist. It is a thing. There is a natural upward bias to stocks. We're basically equidistant between the two. That's the Nasdaq. The Dow was negative on the year at the end of last week. So, and that's what I mean. Like the Nasdaq has to pull everything up with it, and today it did a really good job of it. But it might be that the other three pull the Nasdaq down. We'll see.
All right. Let's wrap up the questions for now. I know you're not feeling good, Bob.
Yeah. Okay, I gotta go. I'll talk to you guys next week.
All right. Thanks. All right. The IXIC. So these August highs. Take off a rogue line there. Well, you know what I'm going to do. My my target area still, and we could easily hit this together, would be 12,794. Because we passed the 12,408, so 12,794 would be the next key target, and that would put it in the top area. And remember, it doesn't have to reach those exact highs. This would be the topping area again to watch for a more substantial rollover setup. So that would be, if you're looking at the IXIC, that would be the target area. All right, let's just do a quick recap. Then I have to get back to try. I'm getting some new stuff delivered for the internet, and hopefully it's showing up any moment now, and I want to start working on that before it gets too late. Again, breakout above the major swing high from February. So we continue tomorrow, 42.24, 42, 42.54, and then the major cluster area, if we get there, is right around 4,300. On any pullback now, your major support is about 4,200 to 4,180. So NASDAQ again just keeps chugging on. Just keeps chugging on. Come on. There we go. It did close it. I was wondering if it was going to get that 13,911.25, and we got just above there. So that was using the short-term harmonics from the momentum. So if you're wondering how I got those levels, you see the momentum bars here. Little pullback, 1 hour rotation zone. So start of the momentum bars to the pausing pullback area, and that gave me the next two targets, 13,883 and then that 13,912 area. We'll have to see how it gets overnight with that. The Dow only up 42 basis points, but nothing significant there. The double is still in play. Remember, OpEx tomorrow, and as Bob mentioned, Powell is speaking, and you have a couple other, hold on, let me close a couple things here. You have a couple other Fed speak. We got Williams and Bowman, both right before the cash open, and then we got Powell at 10 Central. So that's really, besides OpEx, that's what's on the radar screen for tomorrow. Russell, looks like if it does continue, we could retest this 1814 area, but now the support coming in just slightly lower, right around 1781. VIX coming way back down. Jeez. Again, no fear. The one-day VIX going up a little into OpEx tomorrow. The DAX coming up to the cluster area at that 16,250. If it continues tomorrow, 16,426 is the next key area. The notes rolling over, and the lowest close since back on March 14th. Going into a really nice breakdown, so I'm watching for further follow through, actually below the 200 again now. I already talked yields. Dollar index was very strong. We did not look at that, but through the 50, and then that other level I put up this morning, that 103.20 area, stalling out there. Next key area is 103.55. Now, it's getting a little overdone, so would not be surprised for a pause or a pullback. And then as long as it really doesn't break about 102.30, it's just an ordinary pullback. But we get a close above 103.55. We could easily retest the highs, and then we have a double bottom in play. Should call it a potential double bottom. With that, a gold, again, continued the pullback here. If it drops tomorrow, 1948 and then 1913 are the next two key targets. Silver, again, this is getting oversold with cycles at the bottom, so would not be wouldn't be surprised to see also a pop in silver, but that would be for another rotation back down. All right, that Bitcoin, boy, Bitcoin, if you're looking at this with all the stuff that's rallying and Bitcoin actually rolling over, not a strong sign for Bitcoin. Tesla coming back to that 177 area. If it continues higher, 179 is the next target. Other than that, we shall cover everything tomorrow. You're welcome, Martinez. You're welcome, Paul. And with that, thanks for tuning in. We'll see if there's anything interesting setting up for tomorrow. Options expiration, my least favorite trading day of any month. And we got Powell speaking. So, could be interesting. We'll see what sets up overnight. And with that, I will talk to everyone later. Have a wonderful evening. Bye for now.